world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Michael Rolph. Michael is the co-founder and CEO of YoYo, a payments, loyalty, and receipt app enriching commerce for customers and merchants. The payment space has been active lately, as incumbents consolidate and startups seek new attack vectors, leveraging open banking, native device components, tokens, and other emerging technologies. Michael brings a valuable perspective to recent developments in the space and talks through where payments might be headed. In addition to the insights we deliver through our podcast and newsletter, Rebank offers advisory services to fintechs, banks, and corporates. Drawing on our experience starting, running, and advising fintech businesses, and our vast network of the most impactful fintech entrepreneurs, investors, and innovators around the world, we help companies make sense of fintech, work through specific questions, and optimize proposition and strategy. For more information about our services, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Michael Rolph. Michael Rolph, welcome to Rebank.
Hello, thank you.
What's broken in your view about the payments industry in the West?
That's a great two-footed dive in right there. So there's a couple of ways to answer that. One would take the view that actually the world is not broken, because fundamentally we're able to go out there and transact in a commerce world, not necessarily seamlessly, but certainly to the extent that no one's struggling to actually buy the things they want to a degree. You know, if you've got the means, then you've got a way. So it's not about solving for a problem that really exists per se, but if you were to add up all of the different fragments of the experience that you have to tie together in order for that transaction to come into existence, there's actually this big machinery behind the scenes that has a lot of inefficiency. And so before a transaction occurs, somewhere along the line, some marketing has probably happened in some way, shape or form. A retailer or a brand has needed to find a way in which they've got a message in front of you. In a branding sense, that could be a billboard. In a sort of true sort of targeted marketing sense, that may have been an email. But whatever you look at it, it's kind of well documented. It's a hugely inefficient industry for a number of different reasons. And so fundamentally, there's a lot that you can solve for if you start to do things like really understand and know the customer, and you think about ways in which you can reach that customer to essentially the personal letterbox to their eyes, the mobile device. So there's a whole bunch of things there that I'll just sort of say, let's put in the bank. For I think, sure, as we go through this conversation, we'll talk about more about what YoYo is doing in that context. Then if you actually get to the point of payment and you look at the physical world particularly, there are a whole number of steps that people go through when it comes to sort of transacting at the point of sale, from digging the wallet out of the pocket, maybe they're using cash, getting a sort of paper receipt, remembering whether they've got their loyalty card or not, being handed the change and dropping the change on the counter, the queue of people, all of these things are what I kind of sort of define as they're the wrinkles in time, that if you could iron them out, you would do, because it would just speed up everything. And then the outcome of having sort of driven the payment is that, again, identifying who the customer is loyalty. And loyalty is sort of the sign that the customer keeps coming back because they've enjoyed the experience so much, or they enjoyed the product so much that they want to sort of continue to give custom into the future. So we don't look at any one particular part of that sort of set and say, well, it's all so fundamentally broken that you've got to fix it. But what we recognize in a sort of a digital first world that we now live, the industry that we are coming from, payment, was never really invented for this digital world. And therefore, if you're going to sort of take the approach that you need to build this new infrastructure for the digital world, what would you build? Our answer is, well, you'd build an end-to-end commerce platform that enables you to seamlessly blend marketing, payment, and loyalty. So to such the extent that if you know who your customer is, you know what they're buying, when they're buying it, where they're buying it, how frequently they're buying it, you can even get down to the why they're buying it. That data, that insight is going to deliver a more seamless, more frictionless, more rewarding buying experience, such as the like that has never been able to be delivered before. And that really hits to the heart of what Yo-Yo is about. We are building the world's most beautiful buying experience.
Yeah. That's fascinating, and it's a very compelling way to describe it. So you're clearly not talking about a payments technology company. You're talking about some sort of marketing / marketing optimization, commerce piece, customer conversion, retention, engagement, business insights, kind of business intelligence to an extent platform, and payments happens to be the regulated financial services product. That's in there.
Is exactly right. Actually, I mean, you almost take sort of the Bill Clinton quote and sort of amend it a little bit for the payment industry. So it's the economy's stupid for Bill Clinton. For Yo-Yo in the payment industry, it's the data stupid. That kind of thing. It's really, I think a lot of people do not appreciate just how much data exists at a point of sale versus an authorization decline or response or an auth response. So it's very binary. When somebody pays by card at the point of sale, all that is happening is you're getting a message back to say yes or no. But we look at the point of sale, whether it's in store or online, akin to an oil field. All the while oil is in the ground, inherently there is no value. And historically, there's all this data at the point of sale that's not being captured and not being harnessed, so therefore there is no value. So the first thing we really thought about doing was building the pipeline equivalent. So our Commerce API is the equivalent of the oil pipeline, to extract that raw material, the data, and actually then ship it to the factory, to the refinery, to turn it into a whole host of things that you've just mentioned. So it's, in some instances, it's the real-time business intelligence of what's going on at any particular merchant location. So, sales going through the till. It's customer insight, because we've matched the customer's identity to that transaction, either through the fact they've used a Yo-Yo powered app, or they've used a card that is linked to their Yo-Yo wallet within one of those apps, that also has the ability, because we've got a relationship with the bank, to match the card transaction real time to the customer identity. It's capturing all of the basket data, either what you're buying. It's capturing time and day. In many instances, it's obviously capturing the who's serving you. And, the list kind of goes on and on and on. So all of this data comes through to form a real view of customer insight. And then on those two things over time, you've got the right sort of machine learning algorithms running. You're able to do some forward predictions about behavior. So if we know somebody's been coming in every day for the last 2 months and they're spending, X pounds per day, that we have some confidence that if they continue that behavior over the next 12 months, they're probably going to be worth, Y amount of total money to a retailer, to a merchant. So if a merchant then is thinking about, what they're going to do in terms of a marketing campaign, the minute we see a change in behavior that says, actually, this customer that looked like they were going to be worth X to you has changed their behavior to an extent that they're now worth Y to you, and that's a negative, by say, £200. Probably the best decision you'll make that day is how you're going to re-engage the customer to maybe get the behavior back to the norm. So the revenue at risk becomes an important aspect there. And the whole, the list goes on. We could spend an hour talking about all the things that Yo-Yo does to sort of really take advantage of the fact that data is what makes the world go round. They used to say it was money, but fundamentally, it's always been the data.
So in terms of the actual payment types that you support, did you mention that you can either kind of pay with the app? I think there's kind of a QR code generation piece, or maybe you can pay with a linked card?
Yeah, so we start off life essentially by sort of showing that we could do what Starbucks had done, but better. So the idea of combining a payment transaction with a loyalty transaction through a mobile device. And so the necessary way to do that, sort of rewinding the clock 5 years ago, was to use a QR code. And there was a great debate at the time, QR code versus NFC. That debate still rages a little bit here and there in some places. But fundamentally, we're agnostic to technology, but we recognize that QR code is still the most ubiquitous and simplest way in which you can enable a mobile transaction to happen. More mobile transactions around the world happen through the form of a QR code. We have somebody called Apple who are making good headways in some instances in terms of the sort of the digital commerce experiences, but in the physical world, maybe not so much. And that's because, as we all know, they're a closed system, which I find quite interesting, actually. I find it fascinating that actually Apple get to play very nicely with an open ecosystem, yet get to close down sort of parts of their technology that would enable a more level playing field for everybody. So I wonder where the European regulator will go with that actually at some point in the future.
So you mentioned that QR codes are more ubiquitous than NFC payments globally. I imagine that a lot of that is driven by behavior in mainland China, WeChat, right?
Yeah, but also the US. Starbucks do more transactions than Google and Apple combined.
Well, I guess potentially because NFC isn't really a thing or a particularly big thing in the US yet. Yeah. But so I imagine you guys draw regular comparisons to the likes of a WeChat, right? It's kind of like approaching things from the mindset of how do we create a commerce platform that has payments built in, and to an extent we're agnostic as to the way that works. What have you seen? I mean, I'm sure you've looked at those massive Chinese companies. What have you seen about what they do that you think works particularly well, and what have you looked to in ways replicate over here?
Yeah, so I spend a lot of time, relatively speaking, looking at what's going on around different parts of the world, and I think certainly the Alipay, WeChat Pay story is fascinating. I'm always about trying to find the root cause of why something happens somewhere but doesn't happen somewhere else necessarily, or hasn't happened somewhere else, and thinking about what are the barriers to stop sort of the like for like development in a new market. If we were to copy what Alipay and WeChat Pay, why would it not work in a different part of the world? So fundamentally, what they really did solve a problem. By the way, what they solved is an infrastructure problem. So in China, there wasn't this sophisticated, sort of landline system that had been in place for 100 years or so, that had obviously then had grown with the development of the economy in such a way that infrastructure was built on top of that, which is actually the story of the West. It was actually the phone line that enabled the card transaction to really work in the US and in Europe. And so everything's been built as a stack on top of that sort of that infrastructure. In China, that didn't exist. So therefore, equally, the concept of people paying by card to each other didn't exist. So they solved the problem for all of these, the rapidly growing entrepreneurial, whether it's middle classes, whatever the definition would be for them, but all of these merchants that were coming through and looking to transact and trade and to grow their business. They really solved that problem by enabling them to take a form of payment that went beyond people's ability to have cash. And so really, in a way, you can look at China and say, well, the banks were kind of asleep and the regulators were kind of asleep, which is not too dissimilar to the story of M-Pesa in Kenya. So those two things kind of have to be sort of self-evident in order for this almost step change in behavior and experience to really manifest. That's not the case in Europe, and it's not that people haven't necessarily tried. It's just that, back to the sort of very beginning here, there isn't really a broken system. There isn't a gap. People are transacting. It's a very well established and developed economy. So, we've already solved a lot of those problems historically by just building on top of sort of the legacy infrastructure of sort of the generations before us.
It sounds like from your explanation, in China, these super apps were kind of catering to a very hungry market, right? People looking for ways other than just cash to pay.
Yeah.
Versus here, I guess, as you're saying, there isn't anything that's quote unquote broken per se. So it in order to optimize the experience, in order to optimize the whole kind of payments flow, new behaviors need to be introduced. People need to be willing to change the way that they go about paying for things, interfaces that are involved and the like. What has your experience been with influencing behavior change? I guess to start at the consumer level.
Yeah, I mean, that's again, that's super interesting question. So if we rewind the story back to when Yo-Yo started, actually Square launched in the US with Pay by Face. It's the idea that you'd walk into a Square merchant and, they'd look at their point of sale and they go, it's Will. And, press the button and magically you've paid. And PayPal very quickly followed suit on their mobile strategy. And I remember at the time really smiling to myself about that one, thinking, that's the best thing that could have ever happened, because it's not going to take off. We're jumping into a future that may exist 20 years from now, maybe even 15 years from now. Who knows? There's a number of years, because it wasn't a step forward. It was a gigantic bloody leap forward in behavior. And the answer in reality, when you have these things happen more often than not, is that you'll get the 0.1% of people that kind of go, that's really cool. But for the normal people who aren't that early adopter about, into the tech and how it all happens, it's like, ooh, that's different. Oh, I don't trust that, or I don't like that. So we've always had the belief, and it's a design principle belief at Yo-Yo, that our job is to develop and design for the incremental 1%. So there's an existing set of behaviors happening today. Our job isn't to fundamentally change them with design. Our job is to design our product and experience in such a way that it infiltrates the existing behavior as closely as possible. Then once you've got that infiltration, you can incrementally design an experience that takes you one step at a time to the future endpoint. So I could legitimately sit here and say, I do believe in the future one day that we will all be paying by a wink, as it were, facial recognition and a, double wink to pay, whatever it may be. That is absolutely possible. But you've got to build the journey that takes people there.
And what incremental changes have you implemented?
So we did some work with Starling Bank more recently, where if somebody linked their Starling card to a Yo-Yo wallet, they'd be able to use that Starling card at a merchant that's powered by Yo-Yo. And when they transact, Yo-Yo can then say at that point, boom, hey, here's your itemized receipt for your purchase that was made at this location, at this time, at this date, et cetera, et cetera. So full-blown digital itemized receipt. And also you've just earned, 2 stamps and 3,000 points. Oh, and you've unlocked a reward, so you now have a voucher waiting for you. So that's taking an existing behavior, but building a bridge to digital, and actually fundamentally truly 10xing a card payment experience.
Is Yo-Yo best suited to be a standalone kind of own branded app, or is there kind of like a natural, I don't know, is this a white label proposition that slots behind a number of banks?
Yeah, so I'm a big believer in that building infrastructure, and so we really have focused Yo-Yo as more of a platform play. Yes, we do have an app called Yo-Yo that's been phenomenally successful inside universities and these closed corporate environments. And it's actually how we started life. But the way we've architected our platform is so that it can be open to third-party developers, and that can come across in a way where they have to connect straight into our API SDK. So if you've got an app that's existing already and you want to sort of supercharge its functionality, then you plug into the Yo's platform, and we're able to do that.
You guys recently announced a I don't know if partnership is the right word, with MasterCard.
Yeah.
As I understand it, to roll out rather than kind of card payments, leveraging some technology that MasterCard's built to unlock this kind of new open banking PSD2 account-to-account payment functionality. Yeah. And I think actually a former MasterCard executive and current advisor, maybe to MasterCard, joined your board as chairman, right?
That's correct.
Do you want to talk a bit about the MasterCard partnership and what the strategy is there?
For sure. So the first thing I'll say is actually these two things are actually disconnected. So David Yates, who's recently joined Yo-Yo as our chairman, is somebody that I've known for an incredibly long time, best part of 10 years. So it's somebody that has both I've worked for him, I've worked with him, and he's also sort of watched the Yo-Yo journey. But the timing, I must admit, is uncanny. And the other connection to the uncanniness of all of this is actually pre-Yo-Yo, and it links to some of the work that I was doing with David when I was at Anthemus, and he was the CEO of VocalLink at the time. Was actually I did a lot of work for VocalLink to create what at the time was called Zap, and has since subsequently become Pay by Bank. And Pay by Bank is effectively part of the partnership that we just formed with MasterCard. So back to this sort of belief that there's for a digital world, new infrastructure is being created. We're creating infrastructure around the data. Pay by Bank is creating new infrastructure around the rails. So, historically MasterCard and Visa are the card rails. Pay by Bank, which is obviously now a MasterCard company in terms of Vocalink, is just another form of rail. All right. So in a digital world, if you really think about it, like, why do you need your card? Like, you don't. I mean, I had a buying experience through mobile the other day, and I'm getting my card out of my wallet. I'm thinking, this is just crazy. I just want to press buy now. And this is why Apple Pay actually is quite interesting in the context of those experiences. So for me, it was very natural then that if Yo-Yo is kind of the application layer that's thinking about how you build value in terms of services that go beyond just the payment, that in the future, a direct bank funding method makes a hell of a lot of sense. In fact, that direct bank funding method is more like a domestic debit scheme. So these are the disruptors to what are I think the historical rail, but not in a negative way, because I think both Visa and MasterCard are probably the best placed to enable that new rail and infrastructure for payment to happen. But equally, from a merchant's perspective, I think we're also starting to walk down the path of the reality of where the industry is going. And when I talk about the industry, I talk about the payment industry here, is going, which is the path to zero, right? So one thing we all know for certain is that merchants do not like paying for payment anymore. And to the extent that even the European regulator has said, hey, the cost of these transactions are going to come down, and they have done significantly, in terms of the cost of interchange. And so Pay by Bank is, I think, a nod in the acknowledgement of the fact that, you should be able to move money cheaply between accounts.
Cheaply is not free, right? Well, is MasterCard getting into Pay by Bank so that they can find some way to kind of generate revenues to replace card transactions?
No, well, I think all businesses are in the business of finding new ways to generate revenue. So, this could be one way that MasterCard think about it. But I don't think that you'll ever get to a point where the cost of payment is truly free, right? You have maybe interchange, maybe zero, but there is so much service that has to happen in and around a transaction, and a lot of it's to do with risk. A lot of it's to do with identity. I think identity is a biggie. A lot of it is to do with experience, loyalty. So these are things that actually you can charge legitimately for outside of kind of the infrastructure of just, well, it's a clip fee because.
It seems like the value add is likely increasingly going to be around the marketing and loyalty piece, certainly if your vision plays out, because PSD2 is kind of built around this concept that the authentication is relatively foolproof.
Yeah.
And because it's an immediate payment, you're not bearing credit risk in the same way that traditionally you have been. So it's
I agree with you.
Assuming that open banking PSD2 are actually implemented in effective and impactful ways, it's tough to see where there's a value add from that traditional pure payment processing standpoint. That's interesting.
I agree. Just to sort of just build on that just slightly. So, the first thing to say is in the payment industry, nothing happens overnight, right? So we're talking about things that are still going to play out over the next 5 or 10 years to become sort of fully embedded. But the part about the values in the marketing, I really believe there's a convergence of financial services and marketing into what we are defining as basically commerce tech, right? So commerce tech is, you're providing financial services at the point of sale, i.e. a way to pay or a way to give credit or, whatever else it may be, insurance, et cetera, and marketing, which is truly one-to-one, personalized, contextual and relevant marketing. And although obviously marketing in itself has gone through a whole disruption around sort of digitalization through the likes of Facebook and through Google, the reality is it's still highly inefficient. And I'd say at times, borderline illegal sort of charging of marketing by these tech companies. So if I take, we're sat here in what's going to become, an extension to Yo-Yo's office. We've got a new floor here. We're in the process of kitting out. And, a lot of the furniture I bought was from made.com. Right? And I happen to like made.com. I didn't have to Google search furniture, and they then suggested to me made.com through an advert. I went to made.com.
That had already happened.
It already happened. No. Right? So I've bought all this furniture. I've spent, lots of money. And now I'm going online and all I'm getting retargeted with is ads for made.com, but not from made.com in the context of like, hey, would you like to buy these pillows to go with the sofas? It's like, would you like to buy the sofa you've already bought again? So Made.com didn't have to spend a penny to acquire me as a customer, yet they're now spending what I can only imagine to be hundreds of pounds over time to basically show me things that I've already bought. Now, if that's not broken, I don't know what is. And hence why when I think about the convergence here of financial services and marketing and what Yo-Yo is able to then do around that true connection of one-to-one, relevant, contextual, personalized marketing, we're in the game of saying, hey, Made.com, why don't you market to somebody knowing that they are your customer or that they are not your customer? That's a big distinction to start with. And if they are your customer, if you know that they've actually bought these products from you, why don't you think about the ancillary products that could attach with those previous purchases? Why don't you spend your money there? Now, you still may not convert everything every time, but guess what? It's a far better experience. And at least you know that you're more likely to invest the money that's going to return for you. And if it doesn't, you gave it your best shot. Whereas at the moment, people are still spraying blindly. And I think it's just a complete and utter travesty in the modern world we live. And the last example I give, and you can tell I'm quite passionate about this piece, is the Facebook model, where all of a sudden now they've got access to all of these eyeballs. They've turned all of us as consumers into the products, and they're making billions of revenue, billions. But how much of that do you see as a consumer from Facebook? And the answer is zero. Now, I think that is borderline disgusting, because we've enabled them to build this bloody business. And they never told us that's what they was going to do. So how about a different world where we had this convergence of financial services and marketing into your wallet, and your wallet happens to be you, the identity of yourself. The wallet is just a mechanism in which somebody can deliver something of value and interest to you. But what if the exchange was different? What if the exchange was, well, I am what I buy fundamentally. Big part of who I am is the decisions I make around what I'm purchasing. So the fact that I like my Muji shirt means a lot to me. It says something about me, maybe not overtly to the world, but to me, subconsciously it does. So I want Muji to know about the fact that I like them. And do you know what, Muji? It's totally okay for you to market to me. In fact, Muji should like to market to me to such an extent they say, hey, Michael, for the next 6 months, here's £50. But to have that £50 discount when you spend X with us, we want to know a few things about you. So can you tell us, what's your favourite colour? What's your shirt size? What's your shoe size? What's your waist size? Where do you live? What's your favourite sport? The list goes on. So there's a fair exchange happening here. I'm going to tell them about myself, and I'm going to get £50 to spend to buy product from somebody that I want to spend money with. That to me is not like a pie in the sky nirvana of theory. Like, this is how the world will be. But Yo-Yo's got to build the steps to get us there.
We've seen some massive deals in the payment space in recent months. Just some huge deals. It's clear that consolidation is happening. It's clear that there are very meaningful drivers for that. Why now?
Yeah, well, I think there's definitely this feeling that, as I mentioned already, that the payment industry is under increasing pressure from a regulatory perspective and from a competition perspective. And fundamentally, there is consolidation happening at the service level. So once before, where there are maybe 28 different product lines within the payment industry being serviced by 28 different companies, the companies that are winning are the ones that are consolidating that 28 into one single API. And that's definitely playing itself out right now. And the only difference between those that are doing that, and I'll give an example of someone like checkout.com, building a single API to connect the world of payment acquiring and processing globally. So if you're a merchant that transacts anywhere around the world, you just connect to checkout and they can facilitate it anywhere, whereas historically you'd have multiple different connection points around the world, is that they're trying to gain the customers, where the established world that have got all these inefficiencies, let's say maybe a WorldPay, they have the customers. So this M&A activity that's happening now, I think what you're seeing is a consolidation approach of distribution and access. So if you've got the merchant, you're winning because you've got the revenue. So the more of these merchants you can buy now, the bigger the defensive moat around the shift of time that's happening. But also the more likely you are to be able to then add these really cool, neat, tech-first, product-first companies that are coming down the pipe. So I'm not here sort of saying, hey, WorldPay is going to disappear in the next number of years, because I truly don't believe they will, because they're buying big enough when it's actually FIS, because they've obviously just bought WorldPay, but they're buying a defensive moat that enables them all of the time in the world, because they've got the flow of revenue coming through, that at the right point in time, when somebody's come along with a big enough, great enough technology and product, they could probably add that to it too, and thus they're going to sort of continue to exist very happily in the future. I think a lot of people have done a good job inside big corporates of learning from this sort of the innovation dilemma of the past of some big companies that have failed to innovate. And innovate's not just about what you build in-house. Innovation is about how you think about the company's existence.
What are, in your view, the kind of burning strategic questions that large payment companies are grappling with at the moment? You mentioned increased regulatory scrutiny, especially in Europe, around interchange fees. There's, as we mentioned, the open banking PSD2 stuff and direct account-to-account payment. What other strategic, big strategic questions are people trying to answer right now?
Okay, so I guess the big one is the Silicon Valley tech giants. I think you'd be looking at what's going on with the likes of an Apple or a Google, and looking at the fact they've built these sort of binary wallet systems that, through essentially providing digital services, that they then said, hang on a second, let's turn our binary wallet system into an open payment system that can play in the existing infrastructure on the existing rails. I think strategically, if you're looking at that as somebody that's in the card issuing game, if you're a bank, you're going, if I was to follow that forward over the next 5-10 years, I'm thinking, holy crap. Because these guys, firstly, have got more money than we have sitting on their balance sheet. They've got more customers than we have globally. There's only probably one other bank, I think, in the US that says it can actually claim to be bigger than Apple. Or even Visa, actually, for that matter. And they are, quite frankly, if you look at the product experience that the guys like Apple and et cetera are coming out with, nowhere near the races. So there is a possible future where Apple, says, well, you can pay by Apple Pay at any one particular retailer. We know you've just spent X pounds. Would you like to put that on an alternative form of credit? And Apple says, well, by the way, it's coming from Apple Bank. These new technology players that are just enabling you to sort of play frictions, like Amazon One Click. Amazon's winning not just because it has a logistical advantage in not having a physical store infrastructure that costs them a lot of money. They're winning because of the buying experience. They put, great tech, customer data, and a one-click buying experience at the heart of their proposition. I think the strategic approach for most payment companies should be, how do they enable their customers to be more like Amazon? Or how do they enable banks to be more like Apple?
That Apple example is such an interesting one. Obviously the kind of Apple Card was launched pretty recently. It doesn't take a great leap of faith to imagine, once there's a bit of traction there, Apple closing off Apple Pay to bank issued cards, right? It's like either the Apple Card or nothing. Yeah. And it also doesn't seem to me like it takes much of a leap of faith to imagine, a routing number and account number attached to your Apple Wallet.
Yeah.
Like suddenly payments are going in and out.
Yeah.
You've got a digital bank on your phone.
Yep. Scary stuff. So the only thing that really stops that is regulation, right? Because again, you go back to this reality that the only way Apple can do all of this is by playing with an open ecosystem. And as much as it's easy to kind of think that Apple, because they're Apple, can do everything in the world and, that's it, game over. The reality is, they'll do some things really well and they'll do some things not so well, and they'll need third-party companies and developers to do those things for them. So I'd be amazed if either through their own choice or through regulation, that they're going to be forced to open up Apple Pay to third parties. I'd be amazed if they're not. And if they're not, then I do think as an industry, people should be scratching their head really hard right now and saying, do we want them in the game? They're in the game, but we now got to stop it. Because that's just not right. Google's a little bit different. Obviously, it is already open by nature, but Android is such a mess in its own right because some devices are NFC, some aren't, and designing for hundreds of different devices, this sort of seamless, beautiful experience is quite difficult. So it's a little bit behind, and also Google isn't necessarily so overtly doing what Apple has done in the financial services sector yet.
Excellent. Michael, Rolph, thank you very much for joining us today.
Thank you. Thank you for taking time.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.